Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is March 20th, 2018, and I thought I'd take a look at wheat tonight, the ETF being WEAT. Mixed bag here on the trends, and kind of a mixed bag in general with this particular market, as you'll see. We've got the short to the downside, meaning the short-term trend, the intermediate and long-term to the upside, despite today's sell-off. So we've got a definite mixed bag here when it comes to the trends. We get a negative rating on the technicals. We get a negative rating when it comes to the seasonal tendencies. But here's what's taking place here. We just generated a pivot low in our elastic level, and we're at critical support right now. The Pro alerts aren't showing anything. They're not showing up yet, but I believe that they will be showing something here fairly soon. The best way to look at this is let's just take a look at wheat on daily bar basis and give you an idea as to what's taking place. So these are daily bars here in wheat. You can see that this is the elastic level low that triggered. Now, typically, we do pretty well. At least, you can see here, in the past year where we had a low period in the elastic level, and that kind of pegged the low that we're seeing here. But you can see that there really isn't a lot of support to the market at that time. There was after the fact, but not before. So here we are right now. You can see that the market sold off below its 50-day moving average yesterday, and it appears to have stabilized and based here today. Same thing basically happened in soybeans and corn. But here's what we're going to be looking at. It's kind of an energy zone. It's very tight energy zone. This particular support level, this 42 on the daily bar basis, and this 16, if we take and go across here for both of those support levels, we're actually in between these two support levels. So you'd say, okay, that's pretty strong support. And that's technically what's taken place, and that's where the indecision, I think, is coming in here with the markets. So between this 42 and this 16 all the way across, that the lows and the closes here are right in between. That's what we consider to be an energy zone. It's not our energy level that I've always referred to, but our energy zone, which means that we're right between support and resistance. This being the case that we have resistance here, despite the color, being above it, and the support below it. We're right there. So you would say to yourself, we're in really strong support to the market. We've got the pivot low that's occurring here, and you would expect the market to really rally here because of that. And that's where the indecision is really coming from. We're going to see as to whether or not this actually does hold, or if it's going to break and we'll come back down to these lower levels. I'll just quote this level right here, and that is at 426 and 3/8. That's what this level is right there. If this is not able to hold, we would expect it to come down and to really approach that particular level. Value charts has now gotten into oversold territory. That doesn't necessarily mean that the market can't fall further, but at least we've started the process. And that's a really key thing with value charts, that when it gets into overbought or oversold in this condition, that we're now in a period where you'd expect the market to continue on its way, continue to be in oversold territory, and build out a bit of a base according to the value chart indicator. So this is where we stand with the support to the market. Now, for ourselves, if I flip back to our website, if we take a look at the grains as a whole, we're currently hedged long 2 and short 2 systems. We get a nice little profit of 9,000 on a contract basis, but we're basically hedged between the longs and the shorts. Soybeans, we've got 2 systems that are short. Nice little profit of 3,200 per contract. And here is wheat, where we're short, and we've got about a $69, almost $7,000 profit just in the one system. So we're expecting, or at least the systems are expecting, the market to not hold at this support and really start to sell off. I'm going to show this just to make this very clear. When we look at the three markets between wheat, soybeans, and corn, wheat is one of our better markets. It has this volatile phase to it that makes it good for systematic trading, where you're able to get surges, take some profits, and be done. So the fact that the market has sold off very, very quickly and we're short, if the market does reverse, we'll probably net a nice profit there, and that lends itself well to the grading system for wheat. The caveat is this. When it comes to wheat, we've had really nice surges and sell-offs, nice profitable opportunities in wheat. The black line is wheat this year, the current year wheat. If you look at the blue line, that is, in this case, the 10-year seasonal chart for wheat. Now you can see that there's been a peak right through here, and the market's been selling off ever since. You might expect a little more downside, and if we break that support level, then that's great for our short positions, and we could go down to that lower level that I was referring to. So because of the fact that we're actually in, if I come back to the chart here, because we're in this energy zone in between these two support and support here, resistance here, we're in that energy zone. That means that the market is poised to make a move one way or the other. So we are hoping that the systems are correct and we break that support level and we fall to this lower level down through here. Otherwise, we're going to have to react very, very quickly. Well, the systems will have to react very, very quickly if the market should rally. If it does rally, because it broke below this 50-day moving average, where is it going to probably go? It's going to probably go back up to that 50-day moving average, and then we'll see if it is able to build out a base. It's not going to have what I would consider to be a V bottom, where the market has sold off and is going to go straight back up. So it's a V-ish bottom. If anything, it would be more of a U formation, and the bottom of the U would form below as it's approaching and trying to break above this 50-day moving average's yellow line. So bottom line is I don't really have too much of a concern for our trade here on the short side. If it sells off, great. If it rallies, we'll most likely have some systems either A, hedge themselves, meaning a long system would trigger to hedge our short position, or we would just outright just get rid of the short position. But because it's in this energy zone between these two, in this case, resistance and support level, these cyan colored lines, in that particular case, it's just at a critical point where it's going to make some type of a decision here. The seasonals would have us believe that the market's going to sell off. Some of the technicals would believe that we're basing here and that we're going to hold at this support zone, if you will, and that we'd rally to the upside. So the reason I'm pointing this market out is that you've got to watch your positions very, very carefully. Our systems obviously will do what they have to on their side. You've got to be looking at this market and make decisions for yourself. But in general, for those of you that are new to the deep dives, in general, wheat is actually a really good market to trade. You should definitely look at it and take advantage of some of the opportunities that are certainly available in this particular market. The ETF again is WEAT. So if you don't trade the actual wheat futures, you could, on a short-term basis, be able to trade that particular ETF. The other thing I'll point out is that we're starting a new website where we're going to have a lot of educational material related to our pro alerts and a lot of our indicators and kind of how to trade in general. We have slated about 12 different webinars that will take you through different phases of trading to help you to sort of go through and understand the markets, when to focus on particular markets, which is what I've essentially done here. We'll have some tools that will tell you when to be able to take advantage of different swings within the market, what we term as the pro alerts when those conditions are ripe. And then the final stage is one which we would look at the systems and how you can take advantage of the systems and automate those types of systems for your own particular reason in your particular trading. So that's what this website's going to be about. It's really on the education side and presenting some of the tools that we use on a regular basis. So there'll be more on this particular website going into April, most likely the first part of April, the whole website will be ready, and we'll be able to do a little bit more on the education side from that side. So thanks for watching, and we will take a look at another market tomorrow. Bye-bye.